Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. To my left is my colleague Suyash Maheshwari. Suyash, good afternoon.
Good afternoon, Shweta.
Markets closing 0.5% higher once again, second consecutive trading session.
As we have been talking about, in the last few days, the movement has been of days of 0.5%. We see 0.5% rise, 0.5% fall, and the trend continues. Indian markets extended their winning run to about 2 sessions now. The markets ended 0.5% higher. Nifty also managed to scale that. Nifty opened above the 19,600 levels. It closed above the 19,650 levels and gained about 107 points, whereas sensex was closed marginally below the 66,000 mark, and it was up about 364 points or so at close. Whereas also the broader market, Shweta, were buoyant today. We have seen some correction in the mid cap space, and over the overall breadth of the mid cap basket has also reduced. But today it was across the board rally, and Nifty mid cap 100 was up about 0.6%, whereas the small cap index gained about 0.8% in today's trade. We saw a reduction in volatility also, and the India VIX index came down by about 5.5% and currently stands at about 10.33% or so. Now, among sectors, Shweta, realty was a top gainer in today's session. It's a rate sensitive sector, and RBI maintaining the rates will augur well for the demand, as the mortgages won't go up. And also we are seeing a rebound in the housing market, because the demand has gone up significantly, whereas supply has not been able to match that increased demand. And we are also seeing housing prices have gone up by about 5 to 6% in some of the metro cities, and premium housing has also picked up, and it is actually outperforming the lower priced houses currently.
Affordable houses.
Affordable houses.
And not so much lower price, come to think of it, below 50 lakh rupees.
Yes. Another sector that posted strong gains today was the auto pack. It was up about 0.5%. Another sector which is rate sensitive, so perhaps RBI maintaining the 6.5% interest rate has augured well for auto stocks. It was up about 0.5%. The metal pack rallied by about 0.5% on the back of a fall in crude prices. And Bank Nifty, Shweta, Bank Nifty saw a significant uptick in the intraday trade, where the banking pack was able to scale the 44,500 mark. If you remember, just a couple of days back, the banking pack had slipped below the 44,000 level for the very first time since September 1. So we have seen a good rebound in a matter of couple of days in the banking pack, and it has surged about 500 points or so. Although we saw some correction, near the end in the last hour of trade or so, and the banking pack ended at about 44,300 levels. I think all the stocks, all the sectoral indices in today's session ended the day in the green. The only sector which was under pressure was the media pack. The media pack closed on a flattish note. It was down about 0.02%, but the media pack has also run up significantly. A lot of media stocks have performed well in anticipation that that it will see increased viewing, given that the festive season is coming up. So a lot of holidays for Indians, wedding seasons out there, and then we also have the ongoing Cricket World Cup. So all that has augured well for media stocks, but today we saw some sort of a profit booking there.
All right, so that of course is the lowdown of how the entire Dalal Street performed on Friday's close. But let's also quickly get in Sudip Bandyopadhyay joining us on the show. He's the group chairman of Inditrade Capital. Sudip, thanks very much for taking time out, sir. Thank you for coming back to News 9. I want to first begin by asking, what are you making of the volatility in Dalal Street? I mean, 0.5% up, 0.5% low. We've seen this happening over and over in the past 1 week.
Well, I think I would say this is, in a way shows the strength of Indian markets. Global markets haven't at all been supportive. And the way the US bond yields have been moving up, I think, one would have expected that Indian markets will suffer, but it hasn't happened. Also, look at the, FII sale data. They have sold heavily in the entire month of September. And in spite of that, I think Indian markets have withstood and kept moving, inching upwards, I would say. Some amount of volatility at elevated levels is expected, and that's what is happening. I also would like to add that, Indian markets have run up. There's no denying of the fact that we have moved up quite a bit from where we were, say, 1.5 years back. And after this kind of a rally, little bit of consolidation at around 20,000, between 19,000 and 20,000 level is probably a healthy sign, because after consolidation, there may be one more big move coming in the near future, maybe around Diwali time. I won't be surprised if we see a bit of correction in mid cap and small cap, and a rally in some of the deserving large cap stocks.
All right. What is the near-term support for Nifty? Will it be 19,500? I mean, we've spoken to various analysts, experts, and we're trying to understand whether Nifty is going to scale up to 20,000 first or drop down to perhaps 19,000 first. Which of the two events do you see playing up in perhaps next couple of weeks?
See, one thing which I will point out is that today US jobs data later in the day will come out. And that will, to an extent, determine the mood of the US markets. It's a peculiar scenario. What is ideal for the market is not too hot, not too cold. Like one says that my tea should not be too hot or too cold. So it's like that. Jobs data should not be too good, should not be too bad. If that kind of situation remains, I think Indian markets will derive support and probably will move across 20,000 next week itself. However, if on the other hand, if we have a jobs data which is not supportive of what I explained, I will tend to think that markets will continue to hover in this range, as you rightly described, 0.5% up, 0.5% down. That's what it will keep doing.
Okay.
Also remember that IT results will start coming out. So some amount of domestic cues will get derived from the IT results as well.
Okay, IT is a different story altogether. I mean, the kind of story that's playing out by the way of commentary that is coming in from, various brokerages is going to play up heavily on IT stocks. But before we move to that, I think, Suyash, it's interesting to point out, Sudip says anything lower or higher when it comes to jobs data will not augur very well for the markets. There has to be a median, not too high, not too low.
I mean, as far as the US markets is concerned, we have seen that the dollar index has surged to, I think it's currently at a 10-month high or so. And in fact, early in the morning, we saw that there was a correction in crude prices. There was a slight bit of correction in the US bond yields. But the third major factor that has been, pulling the markets down was the dollar index, which has not really eased as much. So, economic data coming from the US is also very important because it will give us cues as to what Fed's decision will be. I mean, if the economy continues, the US economy continues to run hot, Fed may perhaps go for that extra rate hike that, Mr. Powell talked about in the last policy meet. If that doesn't happen, perhaps we can see, that it will maintain rates over the next couple of policy outcomes that are due this year. And perhaps that's one of the reasons that, the Indian markets will also track that what's going on in the US markets. Anything, above expectations will not augur well for us because the yields will also spike up given that, inflation is running hot and the expectations of a rate hike will also, strengthen significantly.
Right. So it doesn't work for us either ways, if it's too low, if it's too high. But on crude prices, the crude prices have corrected significantly, Sudip, over the past couple of days after a run-up of at least $8 to $10 back to below $85 a barrel as far as Brent latest is concerned. How does that work out and what's playing up on crude prices? I was reading somewhere very interestingly that despite the OPEC production cut, the demand just hasn't picked up. What does that tell you as far as consumption is concerned in the US and various developed economies?
Well, I think I must say that this is a great news for India. India is 80% of our requirement still gets imported. So, crude oil prices coming down below 85 from where it was kind of touching 100. I think it's a fantastic news for Indian economy, Indian, balance of payments and Indian capital market. So let's first put that right across. The other issue why oil prices are coming down, I would say that, look, I think the OPEC and other oil producing countries have been trying to push up and keep the oil prices up. But the reality is that demand hasn't been really strong. And one principal factor, the way I look at it, is the weakness in Chinese economy. I think Chinese economy not picking up on the expected lines have been one of the principal factors of crude not sustaining at elevated levels. Of course, US reserves getting released periodically does cool off the oil prices. And also the fact that the way the European economy and even US economy is shaping up, I think there probably will not be too much of chance of crude going above the current levels. So our guess is it will hover between the 75 to 85 kind of a range for a considerable period of time. Also remember that the Russia-Ukraine war, which has forced Europe to move away from crude oil to other alternate energies, will have a long-term impact on global oil prices. I'm not saying that will have an immediate impact, but definitely that will have a long-term impact on crude oil prices.
So what's your outlook on the realty pack? Now we saw a 3% rise in Nifty realty today, and there are also reports suggesting that the demand for houses is expected to go up, whereas the supply has come down significantly, and as a result we are seeing a significant bump up in prices of both premium housing and affordable housing. What's your overall outlook on the Nifty realty pack?
Well, I have been positive on Nifty realty and select real estate stocks. I think you're absolutely right in saying that demand for premium housing has been strong. And the basic reason also you have put across rightly is that the supply, there were oversupply. When we went into COVID, there was serious oversupply, and pretty much the entire sector was plagued with that oversupply challenge, and the prices were not going anywhere. That scenario has corrected. New projects haven't come up at the pace at which demand has increased, and that has led to a situation where I think the demand is outstripping supply as far as premium housing is concerned, and that has led to prices inching up as far as premium housing is concerned. And also the fact that new project, even if they are launched now, will take a lot of time to come up, is enabling the builders to kind of really get a good value for ready property or near ready properties. The other factor I would also definitely like to put here is that the entire sector has cleaned up quite a bit, and we should not lose sight of that. The way the real estate sector in India was operating, let's say even 5 years back, it was kind of Wild West. From there, I think GST came in, RERA came in, Ind AS, the accounting standards got streamlined, and all these have actually made the investors have a lot more confidence in the balance sheets of real estate companies. Also the fact that unrelated diversification, wherever the companies had made, they went out of that, and that also did made them look better in the eyes of investors. I think all this put together have really worked wonders. Last point I also must make here is that the introduction of REIT, real estate investment trusts, also is an avenue which real estate companies having commercial properties or building commercial properties received, which should in the long term introduce a new avenue of funding as far as these companies are concerned.
Now, sir, before we move on to the stocks that were in the news in action today, I also want to touch on JSW Infra. Now the stock has rallied about 42% since listing, and even today the stock was up about 4%. What's your view on the stock, sir? Is it time to, for investors who are allotted shares, who were in it for the listing gains, is it time to exit the stock or book some partial profits?
I think it's a good company, first of all, let me say that. And I think it's in a segment where it's not a capital intensive business. And it has a lot of growth path. Building ports and terminals is a fantastic business, and if India infrastructure build is happening the way it is happening, I think they would continue to do well. Initially, when they started, it was a captive business for the JSW group, but they have diversified. And the I think objective which they talked about in the pre-IPO is very clearly to diversify more. And JSW business will become probably a small part going forward. I think all these are good things. The company is doing good. It's not a new company. It's an established company, profitable. But having said all that, I also must say that the valuation at which they came was kind of appropriate. It was not overvalued. There was something left on the table for the investors, and pretty much that got played out over the last few sessions, where the price has moved up quite a bit from the IPO price. But at this stage, I would say that probably it's time to take a pause, and some amount of profit booking definitely should be recommended to the investors who have got the shares.
Now, so if one were to invest in a port operator business, what would be your pick? Adani Ports or JSW Infra?
Well, if I have to invest in one of these, I think I will go for Adani, because it's a much wider basket, and the way they have built their business, I think I'm not getting into the the ownership, the challenges, all those issues. These are irrelevant to the context of Adani Port, because it has solid assets on ground. If you look at Indian Western seaboard as well as Eastern seaboard, systematically they have accumulated assets both on Western as well as Eastern seaboard. Now, this gives them a fantastic position as far as Indian economic activity is concerned. If India is growing at 6.5%, 7%, or even closer to 8%, 9%, or maybe 10%, which we all wish, I think import and export both will flourish. And if that happens, I think Adani Port definitely will flourish in a big way. So if I have to pick between the two, I think I will go for Adani Port at this stage, considering that India shining, or India development, or India infrastructure push is real and is happening now.
Okay, Adani Ports it is. But also let's quickly talk about some of the stocks that were trending in news this afternoon.
Yes, Shweta. So among the top gainers in the blue chip segment was Bajaj twins. Both Bajaj Finance and Bajaj Finserv gained significantly. In fact, Bajaj Finance touched a new 52-week high. Now, this was on the back of Bajaj Finance's board approving the 10,000 crore QIP. And we saw some rub-off effect on Bajaj Finserv as well. Now, Titan was another stock that gained around 3%, as the company is looking to expand its wearables business that is housed under the Fast Track brand and the Titan brand. Another stock that gained was IndusInd Bank. Now, Motilal Oswal has come out with a report where it has picked IndusInd Bank as its top pick. The Motilal Oswal has raised the target price on the stock to about 1650, which implies an upside of about 18% or so from current market price. Tata Consumers also gained about 1.5% or so after the company said it aims double-digit business growth in the coffee business, led by expansion in both portfolio and in reach. Now, among losers, Shweta, the top loser in today's segment was HUL. HUL, in fact, has been in a bit of a bull run. The stock has rallied about in the last 4 sessions. Today, it snapped that winning streak and saw a correction of about 0.8%. Coal India is another stock that has been on a bullish trend, has run up about 30% or so in the on a year-to-date basis. But the stock has been seeing some profit booking, and it has corrected by about 2.5% in a matter of 5 days. Another stock that saw some profit booking take place was ONGC. Now, ONGC is an upstream company. That means it is in the business of production and exploration of oil, and since crude prices are softening, companies like ONGC obviously take a hit, and as a result we are seeing some profit booking there. Now, Asian Paints is a surprise inclusion among the top losers. Generally, softening of crude prices bodes well for the company, because crude is an essential raw material for the company, and in fact it was one of the reasons why the stock was under pressure, but it continues to see some profit booking, perhaps on the back of expectations that the competition will increase. Bharti Airtel also failed to cheer the investor sentiment, despite it launching plans that were focused for cricket fans ahead of the World Cup.
All right, those of course are top gainers and losers on Dalal Street this afternoon. Sudip, before I let you go, any stock that stands out for you?
Well, there are multiple stocks which does stand out. I think one company I must mention is amongst the large cap is Reliance Industries. I think this is one stock which has got multiple levers and multiple value unlocking opportunities going forward. Whether it's the retail where they're talking about IPO or something like that in 25 FY25. They have the entire Geo platforms business, which is the telecom business, which also will get unlocked at some point in time. The green energy business, which is developing inside Reliance Industries, is another area where some value unlocking will definitely happen in the near future. Considering all that, I think the stock hasn't run up at all. And investors should do well picking up this stock for long term as far as large cap is concerned. Also, I must mention that HDFC Bank, I think this is one bank which has lost quite a lot in peer comparison terms as far as share price is concerned. But things are getting better and better as far as HDFC Bank is concerned. And investors will do well to pick up HDFC Bank at these rates. Amongst the other sectors in the market, I like textiles. India UK FTA, I think it's a matter of time before it gets signed. And if that happens, some of the textile companies will be the biggest beneficiaries. I can talk about Gokaldas Exports. I think definitely they will benefit. I can talk about Arvind Limited. It will benefit. So I think some of these stocks definitely are worth considering at this juncture.
Okay.